Okay, so this is going to be, I guess, so how to use the system a little bit with Rinko added into it. Before I get going, I'm going to cover a few things that I was asked. Why am I, and I've been asked this 2 or 3 times by some people who are new to the group, why am I teaching Forex now? Well, one, because it was requested over and over again. Two, because every day you can't trade binary options. There's going to be some days that with no range, that all you have is trending markets. So instead of sitting on your ass and doing nothing, you can trade Forex. Um, Before I get in, well, let's just keep going with that line of thought. Next question I get in when people say that is they say, I don't have $10,000 to open a Forex account. My question back at you then is, did you have $10,000 to open up a binary options account? If you're trading Forex with a proper risk reward ratio, let's say for instance you're using Markets World. If you place a dollar trade on Markets World, your payout if you win is 70 cents. So that risk reward ratio is not even 1-to-1, meaning you're risking a dollar and you're not even getting a dollar back. Now, before anyone gets into it, binary options does have its place. Binary options on a flat market or a ranging market is great because I can't scalp on a flat or ranging market. There just isn't enough pips there, and I can't have the proper risk to reward ratio. The bare minimum I would ever do is 1-to-1 risk reward ratio. What that means is I'm willing to give a dollar, I'm willing to make a dollar or lose a dollar. It evens out. If I'm willing to make a dollar, I'm willing to lose a dollar. Typically, I try and use a 2-to-1 risk reward ratio, which means that I'm willing to lose a dollar to make $2. So if we look at what that also means is that I only need to be right 50% of the time. Now, with binary options, where you have to be right 60 to 62% of the time with Markets World, some of you guys have 24 options. I know Steve does, and he's getting I think he said 78 to 82% payout on some pairs. He's in the mid 50%, but it's still not as good as your worst case scenario trading Forex, which is a 1-to-1 risk reward ratio. You only have to be right 50% of the time. And y'all can do the math on a 2-to-1 risk reward ratio of how often you have to be right. And if you can't figure it out, let me know. But it drops it down significantly. So if every trade I win, it makes me $2, I lose, it makes $1. You'll get the idea, but it comes into way below 50%. Next, so talking risk reward ratio, we'll get into that more in depth Monday. Basically, we're just going to focus on how to trade the system, but I did want to cover why I'm teaching Forex. One, it was mainly because of request. Two is because I spent enough time on the 1-minute charts over the last year and a half, 2 years. I mean, if you've been in TA with me, you've seen the excuse the language, but you've seen the fucked up shit I came out with trying to deal with 1 minute. I started off with itchy on the 1 minute, and it was unreliable. I couldn't consistently keep the same results coming out. I would have really good days, and then it would go to shit. And I know that sounds like, well, that's the market. I mean, no, by keeping to the same metrics, by following a set of rules and doing the same thing over and over, even when market conditions were being met, the system was failing. So I ditched it, and I went through God knows how many other different things. I finally settled on what you see now. I liked itchy because the clouds made it very visually easy for me to see a trend. Now, so I combined the itchy format with EMAs and channels, and that gave me exactly what I wanted. I can see clearly when to get into a trade now. I can see when there's a trend, and I can see when the trend's dying out. We can see there was a trend here, and trend was dying out here. With just plain EMAs, with just the lines, I'll be honest, it was giving me a headache, and for some reason with the cloud, I guess because I trade itchy most of the time on the higher time frames, the cloud just gives me a much better visual perspective of momentum and strength of the trend. So by combining the two, this is what we got. And I mean, hopefully you all agree. This isn't going to be for everyone. Everyone's going to have their own way of trading. But hopefully you do like this, because the cloud mixed with the EMA and the offsets and the channels and everything does make for a nice, easy visual way to trade. So when we're trading, this is designed for trend only. If it's not trending, then you want to go back to trading bins on a range, and you should do very well. So now you have two options: trend trade, range trade. As we can see, and I'll go through this, I'm just going to go through each chart real quick, and then we'll come back and y'all can tell me. Okay, so I'm going to focus on the Renko charts first so you can see the setups, because the majority of your setups in and out are going to be based off the Renko charts. You will use, again, the 1 minute to show that the chart is tradable, price action. Basically what I mean by that is we still up here. If the candle size is below 1, we don't want to be trading. Remember this red channel is 2 pips. If candles are riding inside this, it's too small to be trading, which will be confirmed by this. I love Renko with the clouds. Neo, if you remember Neo, he was in the group. He tried to get me to try Renko a while ago, and I freaking hated it. But the clouds with Renko have just put it into perspective perfect for me. I am loving it. Okay, so back to what I was saying is you're still going to be using this chart. This up here is one of your most important things. For one, it tells you if you should be trading or not. If this is below 1, you don't want to be trading. You're going to get into a trade, and it can take you 10 hours to move 10 pips. So if you're typically during the beginning of the Asia session, you'll see this drop down to a half a pip across the board. So if you have the last 60 candles being half a pip big, you'd be a dumbass to get in. You can also use this, throw it on. It's included in the pack. Throw it on your freaking binary options charts if you want, because it will help you tell the size of the candles. The same with binary options. If you're getting 1 or 2 pip movements, that's dangerous, because then the spread over here, it's 1.1 right now. The brokers can take away 1 pip of movement. Well, about a half a pip of movement, being realistic. But if they want to be real greedy assholes, they can take almost away 1 pip of movement. So if you're getting 1 pip candles, the spread's 1 pip, you don't want to freaking be trading binary options or Forex. Reason being is, 1, you're not getting the candle movements, and 2, if you're trading binary options, they can use that spread against you to manipulate price. Okay, so that covers that. Next, let's look at the Renko, and here's cable, and then you tell me which chart you want me to go over, because I don't want anyone to think this was pre-set up or anything. Here's cable. Here's Euro. Here's UJ. And here's AUD USD. Whoever types it in first, I'll review it off of that chart of what we would be trading and what we would not. So y'all pick the chart. We have cable, Euro, UJ, and AUD USD to pick from. Whatever y'all freaking want. And again, once you get the hang of this, if you can't make some freaking money, and I'm going to get into this in a minute once I show the trades, compared to binary options, it's just ridiculous. And again, getting back to while we're waiting to see which chart y'all want, getting back to that, $100 account and trading like 0.05 lot sizes, literally you can still pull in the same amount if you were trading small on a Markets World account with $1 or $2 trades. You're actually going to end up making more. Once you get the hang of it and you get the stop loss, take profit, and risk reward in there, you're really going to be making more money than you would trading binary options on the small amount. And as it grows, I mean, I'm not bad talking binary options, but these are both feasible ways to get into the market and start trading. If you get into either one of them thinking you're going to get rich overnight, you're going to fail. It's the same principle for both. So don't get into it thinking it's a instant money thing. Build the account slowly. No one has an option on a chart. No one gives a shit. Alright, so let's pick, I don't know. This one looks good because we have an upside and a downside to it. Let's zoom out one and see how it looks all the way. This one will work because we got here, so we can see what would have happened on a couple trades. So we're going to go with cable, which is GBP USD, if you didn't know. We're going to turn off the automatic scrolling, shift end of chart from right border. We're good there. It's going to be cheating a little bit, but let's go back to... And we'll start off with this. Taking a look at this, and this is where I'm telling you Renko can help, along with your 1 minute charts can help. If you're looking at this, what should you be trading? This whole section right here. What should you be trading? Again, this is where it comes into the fact that you can have binary options and Forex can complement each other. Because what you see on the chart right now should be telling you something. No opinions. Y'all are going to be quiet today. Tony got it. We should be trading bins because we're ranging. We have approximately a 30 pip range, which is excellent for trading bins because it means price is moving up and down. Now, is it going to look this pretty when you get to that 5-minute chart? No, because Rinko makes everything look kind of nice and structured because it's removing the noise. So we don't want to trade this. You'd want to switch over to bins, and if you're doing reversal trades, do it. Now, if you're trend trading with bins, this is probably a signal for you. Don't trend trade your freaking bins. Everything we have here on any setup, we'd probably get stopped out. You could be really aggressive, but we don't have any actual setups here. I mean, we do, but you should be able to see by this, no. And when you look at the 1-minute chart, it probably compliments you saying, no, don't do it. So as we move forward, we're going to keep moving forward. Now watch the right-hand side of the screen, and we'll see when we start getting some setups. Okay, so here's our first shot where we have the slow-moving cloud, medium, and our fast are all starting to line up. Now, do we want to jump in right away? One, I would say you can if you want to, but this would be your riskiest trade yet. But what we'd be looking for is everything aligned. So this candle here, everything aligned. We had a slow moving, medium, and fast all aligned. For the shits of it, I'm going to go ahead and mark it, and then we'll keep moving forward. Anyone here, now this is an aggressive way of trading it, okay? Because we just came out of shit. I mean, we almost had a setup here, and we had the setup here, but we didn't want it. This was the first time we had an actual setup. We had it here too, where I say this would be risky. Actually, we didn't have it here. We only had... Oh, we did, but it was too damn small to mess with. But let's just keep going forward. Price does move up, so this would have been an okay trade. We would have probably gotten out of, let's see, 3, 6, 9. I'm shooting for about 12 pips now since I switched to Rinko. I wait until the Rinko candle has completely formed, correct. So my entry candle would have been candle bar. We'll keep it simple. Come on, tell me I can pick my arrow, you little turd. Okay, you son of a bitch. I love how I go stupid when I'm recording. Can't just be quiet. I'll make it white. Maybe that'll stand out. That would have been the entry candle. So hopefully somewhere 1, 3, 6, 9, 12. Exit candle would have been... Where's my freaking arrow? So 3, 6, 9. There's the 12 pips. Right there. Exit would have been there. Now, we'll talk about something else. We'll leave it at that. Basically simple. That's what we're looking for. So that's our first entry. Then we would wait. What would we be waiting for? We'd be waiting for a pullback. We see the pullback here, and we could have gotten back in again. So this is why I say it gets risky. So here's our pullback, here's our candle, and here's out. Let's see what happens if we would have taken this. Here's our out, up, and it drops. So let's take a look what would have happened. Okay, so let's count. Here's our entry and bottom of it. So this would have been 3, 6, 9, 12. We would have gotten stopped out on this candle. So boo, we lost. 12 pips up, 12 pips down. Now, if I was using the trailing stop, which it isn't adjusted right, that's about where we would have got stopped out too. Because remember on the other one, I removed my trailing stop to about the middle. So somewhere about here, we would have gotten stopped out, no matter how we were doing this. I'm keeping it simple right now. We're going to go into trailing stops on Monday. For now, we're just going to assume like a 6 pip stop loss. So actually, it depends on what you want to do. We're just going to go 1-to-1 risk-reward ratio. So I need to be right 50% of the time on this little walkthrough. Now, this wasn't okay. We had a slow-moving, medium, and our channel was there. So it was a qualified trade, but we lost. 1-to-1 risk-reward ratio, so we're about break-even right now. Continue moving down. I'm sorry, I keep skipping ahead, and I don't want to because that's kind of cheating for y'all. Comes up here. Now, we know we just had it. So here's a pullback. We still have the valid setup. We could have gotten in again, This would be entirely up to you here, but we can see these smaller MAs are moving downwards here. They're super tight. We don't have any little cloud. When they're super tight like this, do we really want to get in? We want to see everything with a little bit of room on it. So this here would be a pass for me because look at this candle formed. I can't even see shit there. It's braiding. So this would be a pass. Reason B is our fastest moving are braiding. Our fastest moving are the current momentum of... It's our fastest moving momentum, basically. These are your overall direction, and this little channel here is kind of like your momentum. If it's nice and big, we got momentum. If it's dropping down together, that's a warning to stay out. Price came down, price comes up again. Now this time when it comes out, do we have a full setup? Here's our slow moving. We can't see the medium, and the fast is still what? It's still braiding. So let's keep moving along. Price comes up. It came out and cleared. We don't have a medium candle. We don't have a medium cloud yet. So we have nothing. Now here's our medium cloud. So when do we see the medium cloud? We get a little tiny pullback. This is actually the first one, but I don't think anyone would be able to see it. So this is probably the first one you could see. We can do an entry here. And I know this... that's not a freaking horizontal. That is a horizontal. I want vertical. Let's just be so cautious so that we can see that the gap's here so we know it was there, but until we can see a color. So that's our first entry. Everyone agree on that? Why? Slow moving, medium is now showing up. The channel, the fast moving channel is spreading out. And if you look closely, there's a green bar and a blue bar. We want them apart. This is only like, I think, a 5 and an 8. I don't remember what it is actually, but they're apart. We don't want them touching. We don't want them together, such as like this or like this. We don't want this shit braiding. If it's braiding, that's a warning that we're going to get stopped out. Okay, so 3, 6, 9, 12. And that's it for the money. Let's see. We'll put 3, 6, 9, 12. So there was our exit. Let's continue moving forward. Okay, we're waiting for a pullback now. Here was our pullback. Okay, so here's our candle that came out of the cloud. If you want to be aggressive, you could take it on close. If you want to be a lazy ass like me, we could take it on this one. So, I don't know, it's up to y'all. Let's do aggressive this time for the hell of it. Again, we're going to try and get 4 candles in a row after that. That'll be 12 pips. So we got 3, 6, 9, 12 up here. So 3, 6, 9, 12. So that was an okay trade. Barely. We hit a pullback. But, just in case, let's see what happened if we did hit that pullback. So we hit a pullback here. Maybe, maybe not. Maybe you have a broker with a shitty spread and you had a 2-pip spread on this, so you didn't get out of that trade. Price dropped to here. Was your stop loss hit? You're still in this trade. So again, it goes up here, up here, up here, and this candle would have closed you out. So either way, you had a good trade. Again, let's go aggressive-ish, I guess. Actually, no, let's go not aggressive on this one and see what happens. Entry, 3, 6, and it drops. And you get your ass handed to you on this one. So, where is it? Where is it? Now remember, this is a 1-to-1 risk-reward ratio. This is worst-case scenario you should ever be trading. Where is it at? I will give you a hint. What I do is I put a 6-pip trailing stop on these also, but we'll talk about that Monday, so you can get a little bit better idea of how to get in this. Okay, so here was our trade. Up, down. So here's this one. We need to go 3, 6, 9, and we got our ass handed to us. No big freaking deal. 1-to-1 risk reward. We're still at break even. This is not how the system was designed to be made. I'm basically going over entries and so we can see it, okay? To Monday, we're going to be going over how really you should be trading this. We're going to go correct risk reward ratio of we're going to do a 2-to-1 basically. So if we were doing 2-to-1, we wouldn't be losing. Okay. Bam. We lost. So let's see. 1, 2, 3, 4, and shit, we lost. You can see, am I getting upset by this? No, because what this system's designed for, it's designed to pick up some pretty freaking heavy moves, even on a 1-minute candle. Price comes down. If we look, Our first entry, if you want to be strictly by the rules, now this is where the 1 minute charts would come into play. And I can't go back and look at them because Rinko time doesn't adjust to the charts. There's a pretty good possibility I would have gotten in somewhere along here with my 1 minute charts. But let's say even if we didn't, let's follow strictly. Here's our first, let me draw a horizontal so I can just plop it down. Here's our first complete setup where everything aligns. Right here. Let's count down. 1, 2, 3, 4. There's 12 pips. So let's mark it. 1, 2, 3, 4. There's our 12 pips. Now what are we waiting for? We're sitting and waiting for a pullback. Now, the pullback for you or me, here's where this comes in. Here is a small pullback. This is going to be up to you whether you want to get in it or not, but you're looking at the 1 minute charts on this. So if we go to the 1 minute chart and, for instance, we see something like, let me see if I can find an example of a decent pullback. Here, let me get it off. So let's say you're watching this, and this is the pullback, but over on Rinko, because it's only a 3-pip pullback. Okay, so let's say this is, and this is why I'm trying to explain it. This is kind of ucky. It looks like a huge pullback, but then price moves up. And this isn't a perfect setup. Ignore what's happening here, actually. Or let's say here's our movement down, and here's a pullback, and it's only 3 pips. It doesn't look as pretty here, but it can tell me, hey, there was the pullback. So when I come back to here, I can say yes. By comparing the two, I can say, yes, I want to get back in. So yes, I get back in. When do I get back in? When the next candle closes south and it is below the channel again. So 1, 2, 3, 4. So we did good again. So where is it? 1, 2, 3, 4. So we did good again. What are we doing now? We're waiting for another pullback. Pullbacks will be confirmed on both charts. The Rinko is going to make it easier to see it, but it doesn't give us the real information we need. Candle comes up 2, and let's see, closes down 1. So here's our entry. 1, 2, 3, 4. Depending on your spread, probably good. Let's move on. Now, price starts moving up. We have nothing here. No trade setups, no trade setups. Nothing, nothing. Okay, so what do we have here? Let's notice. Here's the red cloud, slow moving. Our medium's starting to peek through. What do we have on the fast? Do we have a valid setup on the fast? Is it starting to spread as it's forming? Here's our closeout of channel. So let's take 1, 2. Well, I can already see it. Damn it, I went too far. 3, 4. Sorry. I'm trying not to cheat, but I keep moving ahead too far. So there's another trade for us. Let's move forward a tiny bit. Price stalls out and goes up. Let's move forward a tiny bit again. Price comes up to here. We still, if you hadn't hit, we still aren't stopped out. Stop out on this one would be 1, 2, 3, 4. Stop out on this one would be up here. I'll mark it just so we can see if we hit it. And again, this is worst case scenario using 1-to-1 risk reward ratio. This is what I'd recommend if you're just going to jump in and play with this on a demo, just to get the hang of entries. Then Monday we'll worry about how we're actually trading this shits. Forward again. Oh, then we're at the end. Shit, no fun. So right now we should be sitting, either we took that trade or you'd be sitting in this trade waiting to see what happened. Since it was NFP, we wouldn't have been in it. But that's it. Any questions on the concepts? Do we see what's going on here? And I mean, are we confused? So let's go back and look at 1-to-1 risk reward ratio. How did we do? I forgot to mark this one. So this is here. Let me. Okay, so first one, win. Hopefully this pen will work. Second one was a loss. This was a pass. The third one. Come over to the fourth one was a win. God damn it, my pen. I got a pencil. Woohoo! They don't stop working. Where was I? We're at 3. So first trade win, second trade loss, third pass, fourth trade win, fifth trade win, sixth trade loss. Come down. 7th, 8th, and 9th win. Okay, so and start. Let's see if you want to see how shitty Windows 10 is. Watch this. I hit start typing. What happens? Not a goddamn thing. So and here's another how shitty it is. Watch this. Let's go to C. Let's do calculator and watch this crap. I bet it won't. And it worked. Okay, prove me wrong. Okay, so 12 times 2 is 24. So we got 1, 2, 3, 4, 5. We got 7 winners. So 7 times 24 equals, we got 168 pips, and just right there, minus. So overall, you got 144 pips. Let's say you were trading 0.1 lots. That's $144. Basically. Now, minus commission, we're looking at about $120 probably. So you made about $120. That's simple, guys. And that's with I'd say a $200 account could do that. You could do it with a $100 account, but you'd be breaking some shit ton of freaking risk management rules. You could do it with 0.05 lots, and let's see, 144 divided by 2. So doing 0.5 lots, you made $70. Give or take, probably 60 something because of commission. So can you see how Forex, even with a smaller account, it's not going to kick you in the balls? It's about the same as binary options, except for the fact that as your account gets bigger with this, you have less risk. I only had to be right 50% of the time here. Now, if this would have been binary options, I had to be right 60% of the time, bare minimum. So this would definitely not have been near as successful. This is a very simple and easy to understand system. I don't have alerts on it or anything because I really don't want to see the shit. I want you involved with the charts. Now, what are some of the drawbacks? Let's get into that. Renko will move fast. You need to be paying attention to the charts or you'll miss some of your entries. The second thing you do, you never want to get in towards the tail end of these or you're going to get your ass handed to. We always want to be very close to the initial breakout. If you're getting in after the breakout, and I demo it, you will see. If you're not getting into the initial breakout, you're going to get your asses handed to you because you're going to get a pullback. The market almost never moves like this shit. It's always going to have a pullback. So we always want to get in at the beginning. Any questions so far? That pretty much wraps it up for what we're looking for this. Monday we're going to get into trailing stops and how to actually trade this to pull in a bit more pips. I'm going to show you real quick a little hint on it, on how we trade it before we go, so that'll leave you happy for the weekend. Okay, so let's do object list, and I'm going to remove everything from here real quick. Delete all, delete, goodbye, close. Back to our normal chart. Argo trail. This is our trailing stop. What we're going to be going over Monday is risk management, money management, making your account last, and getting your risk-reward ratio correct will be Monday. Little sample, though. So here was our entry candle. Blah, blah, blah. Let's say there was our first qualified right there. Okay. Why didn't I take it all the way down, and what would have stopped it? You can go for these bigger moves, but you don't know when to get out. So let's try something. Remember what I said, with my trailing stop, I want to see this, and I want to see it riding right down the middle. This will take, there is no set setting for this. The market's going to change, so you're going to need to adjust it. F7 that shit before you get into it, and this is part of maintaining your charts. You go through and you check your candle sizes. You check on the 1 minute what the inlines looks at. You want to make sure everything's good. One of the other things you want to do, make sure your trailing stop's set up right. That's about dead center right there. So let's see what happened. This was our, and let's count it. 1, 2, here, let me mark where it got stopped out first. So let's take our little, where is our line tool, and let's mark it, and let's see what we got doing it the way basically I'm trading it. I see a wick hit there, so I know that was our close. So what did we get out of it? Let's see if it was anything great. 1, 2, 3, 4, 5, 6. So instead of, and this is if you did not exit out. If you want to be greedy as shit with this and just let it run, this one worked out okay. But typically, if I get more than 12 pips on a 1 minute, I'm good. But what would we have gotten if, let's say, our goal was 20 pips? So 1, 2. Let's look at what the max available on this was. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And so everyone can see the math. Okay, and now it doesn't. There it goes. 15 times. So the actual potential out of that move was 45 pips. Now, realistically, are we going to get that? Hell no. We don't know when the markets are going to bottom out. So, no, we're not going to get that. By using a trailing stop, we could have just let it run, and we would have pulled in 15. Or with me, when I see a heavy downtrend like this, you could last through that pip, and what I would be looking for is about 20 pips. When I see something like this, I'm going to be increasing it. So 5, 10, or 3, 6, 9, 1. Here, let me just count. Shit. 1, 2, 3, 4, 6, 7, 18. So actually my exit would have been here before it even happened. It's going to take a little bit of playing with and getting used to, but unless you're a total, and please don't take this wrong because I know someone's going to screw it up and lose money. Unless you're a total idiot and you don't follow the rules, you should be able to do something with this without too much difficulty. I mean, can you see how I've made this as simple as I can. All you need to learn is basic price action. You need to be able to recognize bad market conditions. If you can recognize them, bad market conditions. For instance, we don't have a setup here, but does this look any good? Here's our medium. Here's our slow, medium, fast. If you saw this, do you want to get into this? This makes no sense at all to get into. Now, you might have screwed up when it first formed. So here's our first signal, candle. Looking to the left, do you want to get into that? Look at the candles. It's self-explanatory. The candles are bumping up and down, up and down, up and down. So what makes you think by getting into this candle, just because everything's aligned, that this trade's going to work out? Now, this is where it would get a little squirrely, because we come up here. How many candles do you want to wait before you get into this? This is where it's going to take you using your head. This is also where you would bump back to your 1 minute charts and see what you got going on, because if this corresponds with the 1 minute chart, then you know, jump in this shit. And you're only looking, let's say, again, if you're only looking for 12 pips a trade, 9 pips a trade, whatever. I do 12 to 13 typically, because that gives me a 6 to 7 stop loss, but it also depends on the candle sizes here. Because right now we're looking at what? Average, we're looking at 6 pips, a 6 pip movement up and down. If we use a 6 pip stop loss, what's going to happen? Let me put it this way. What's your stop loss on this chart? Anyone got an opinion? What should my stop loss be on the chart as by up here? So what should my stop loss and take profit be? Remember, this is after news, so the candles are all kind of big. Anyone? I'd be looking at a bare minimum of a 12 pip stop loss, because one candle can wipe us out. One candle plus spread would wipe us out. 12 would be a very tight stop loss of 2 candles down. Alex got it. That's a very tight one, but it's about correct. Okay, so any questions or anything, guys? Because that pretty much sums it up for today. I just want to get the basics out there. Monday we'll go over risk, reward, and money management. And remember, today's NFP. If you want to trade, do it at your own risk. It's already been blown through, but it's at your own risk completely. And let's see, I have somebody that sent me a trade. Okay, so here's an example. This isn't me. This is somebody who sent me a trade because they're using it. They added in some crap to it, but This is what their trade looked like. So I don't know how many pips they got because I can't see. But they were using, and you can see they didn't get. They almost got stopped out, but it went up and then they closed it. So they got what 3, 6. They pulled out 9 pips. 3, a little more, tiny bit more than 9. 3, 6. Yeah, they pulled out 9 pips. So not that difficult to use. I mean, some of the other people are already using it. Looks like he's using Super Dem 2, and I don't know what the dots are, but that was the trade. Alright, any questions, guys? Otherwise, I am done. And Monday, again, we'll go over everything else. Don't forget, if you got charts, trades, save them. We'll go over them then. And if there's no questions, I am done. Okay, if there's anything else, hit me up on Skype. I'll stay in this room a little bit, but I'm not going to broadcast. But if you have questions, you can ask them here or hit me up on Skype.